Hey guys, this is Nima from Amber Cryptocurrency. In this video, I'm going to explain why do we need stop losses and in what ways that I am using in order to find my stop losses. Some of them even I used to, depends on strategy, but we don't have only one way to find stop losses. There's many ways, as we have many ways in order to find the entry point. So first of all, why do we need stop losses? We need stop losses because our strategy does not work 100%. We're not going to always 100% reach the taking profit point. And sometimes the best strategy works 70% to 80%. That means 20 to 30% in the best phenomenal strategies, the strategy is going to fail. And we have to minimize our losses. We have to stop losing more money. And in this way, let me start with the way that first, the price action, you can find your stop losses. And this one is the one that best works with either there's a trend, like a bull market or the bear market. And it works the best in a weekly and a daily time frame. So imagine the market went up, and you expect this area is going to be area of the support, and the price is going to shoot up, so you're going to buy here. So this is your entry point, and you put your stop loss a little bit below this point in order to avoid the stop hunters, because it happened many times. So this is your initial stop loss point, and the market shoots up. We have a higher high and we have a higher low, and the market still continue going up, and it break this higher high in order to have another higher high. So at this point, we can minimize our risk and bring our stop loss below this lower low, as we have a higher low at the moment. This continues as well, as many as we have a higher high, we have a higher low, and we're gonna bring our stop loss over here. Let me give you an example with the situation that happened. So imagine there's a trend line over here, you break the trend line over here, and there was a good supporting area as well. You see some of the candle that's going up, like three green candles, and you open your position right over here, and you put your stop loss below this, as this is a really great area of the support. So you put your stop loss right over here. Now we have a higher high, we have a higher low. This I don't really consider as a higher high, as it did not break. So I was waiting to if it breaks this area, which it did with this candle. So I bring my stop loss below this lower low. Again, continues higher high, higher low. I'm just waiting something a big candle break this area in order to bring my stop loss and exit point a little bit higher as well. Same thing happened here, high high, high low. If you want to be risky as well, sometimes you can bring it as well. So because this is not much of a high high, but in a daily candle it's not, but in 4 hours candle it is. So if you want to be risky, you can bring it higher up a little. And in this here, we have to exit the market as it touch our stop loss with a couple of shadows as well. So this is a good place we can exit the market. So in general, we had a profit of 317%, 320% in 186 days. All right, you might ask me, why shouldn't we go all the way to top? Why shouldn't we sell over top? The reason is we cannot always expect or now have a perfect analysis where the top is. The reason is the market could have gone like 80K. We don't know. We just want to stay in the market as much as it can give us profit, and we are minimizing our risk as well. What if this one wasn't the top? How do we know? The reason we don't. We just want to use this strategy in order to maximize our profit and minimize our risk. So this is a price action way that I'm using it when there's a trend in a daily or a weekly. Even you can use it on the bear market as well. Same thing, you open the selling position, you bring your stop loss here, you bring your stop loss here, you bring your stop loss here. And if the market has a reversal, you gotta touch your stop loss and you exit your trade. Now, the next one that I'm going to talk is about the trend line. Let me see, let me put the magnet on, turn on the magnet. All right, so as you can see, this area worked perfectly. So this was a resistance, it became support, and again, resistance. So imagine we're at this point of the market. You can see this trend line works perfectly as it works as a resistance and support in this level. And when we have a true breakout after this one candle, you open this position, selling position, and you're saying, if I see 1 or 2 candles closes above this trend line, I'm gonna exit my strategy, which hasn't happened yet by the time of recording. So if this happen, for example, from tomorrow or whatever is that, we have like one candle closes, you can exit your selling position right over here. So you have to work with it as well, depends on your strategy. Maybe one candle, two candles, depends on you, how much you want to be risky. Now, let's get into some indicator rather than using price action and the trend line. The first one you're going to use is moving averages. You have to play with the number of the moving averages as well. For some strategy, for example, you have a long position over here. Your closing can be if there's any candle closing below this moving average, which it does happen. Maybe make it a little bit more visible. All right. So you have an opening strategy. You have a strategy here. You buy and you're gonna sell when there's one candle closes below this moving average, which is happening over here. So this is how you can use it as well. Same as for the short as well. If one candle closes above moving average for the short position, you can close your short position. Same as the Dungeon channel and the Bollinger Band, you can use the middle line and the upper and lower as well. I'm not going into it, just play with it a little. They are basically the same. The next thing that I'm going to talk about is the Parabolic XR, which is a trend base. You have to play with this number. The lower they are, the less noise it has. As you can see, it minimizes some noises. For example, you have a selling position over here. If by the time that you have a selling position right over here, by the time we see a dot in below of the candle, that means that where we're gonna close our short position. So that means if these dots, the red dots are below, that means the market's going up. If it is in top, that means the market's going down. This is kind of showing the trend. This is kind of same as the super trend. Super trend. You have to play with this number as well. Super trend, let me put 25. It's just a random number in order to minimize the noises. So you have a buying position right over here, and you got to close whenever this turns red, which is all over there, which is not great because this is on 30 minutes candle. You have to work with the higher time frame in order to minimize the noises. For example, you open your position all over there, and you got to close when it's turned green. So this is how you can use the super trend as well. Now, one of my favorites, which is the ATR, which it'll explain how much volatility is currently in the market. And in, for example, last 14 candles, you can play with this number as well. I would suggest to keep it at 14 until you learn how to work with it. For example, let's just have like a example what's happening at the moment. So right now in 1 hour time frame, if you want to open, we imagine that hypothetically speaking, we had a strategy and we guess the market is going up. How do we find our stop losses? Currently, if you can see this number right over here, when the last one, the ATR is 79.57. So something that usually people use, and I use as well, a multiple by 2 or 3. The reason is this is in last 14 candles, but we didn't have much of a volatility, and I usually multiple by 2 or 3 in order to avoid getting my stop loss touch and the trends goes as I expected in my analysis. So if this is 79, I'll multiply it by 79, 52, if I'm 57. Multiple it by 3, and I minus the current number that we have, 364, which is 1925. 1925. So this is how you can use the ATR to find your stop losses, because that works with the volatility, with how much volatility are currently in the market. You can multiply by 2 or 3 so you won't get surprised by more volatility. And this is how you can find your stop losses with ATR. There's one thing as well which I used to use it a lot, but I don't use it now often, but I want to talk about it a little so you understand what it is. It is Chandracroll. Let me see. Yes, Chandracroll stop. All right, what is it? So imagine you have a strategy, you want to buy over here. This this is the blue one, which you can change the color as well. This is the red. I'm just gonna make it for the sake of this video. If you have a long position and the candle touches this green bar, that means you gotta close your long position. Same as a short. You have a short position, a candle touches this red line, that means you're gonna close your short position. Of course, it is not optimized. You have to play with this number as well to optimize it for your own strategy. But I'm just gonna explain, this is how people are using it. You have to play with it to find the way that you can make it customized for your own strategy. I hope you guys like this video. Make sure to like, subscribe. It gives us energy to make more videos, to provide more information so you guys use it and take more profit. And if you want any suggestion, any idea, comment down in the comment section. We would love to hear from you. Thank you.